So one of the trends we've been discussing at BlackRock is this shift in from quantity to quality of growth in China.
Absolutely,
and particularly
yes.
you see supply side reforms taking out excess capacity in some important sectors such as commodities. My question is, to what extent do you think this leads to China driving inflationary pressures in the rest of the world as opposed to being an exporter of deflation?
Right. You know, for many years, China was a deflationary pressure on the rest of the world because of low-cost manufacturing. However, these days, we're seeing Chinese consumers earning more money. They're spending more. So therefore, prices for goods and services are going up. At this point, we don't see China putting huge amount of pressure on global inflation yet because there's an abundance of goods, there's an abundance of services. But what's interesting to watch is asset prices. Housing prices and stock market, can see asset prices on the financial markets have been appreciating quite strongly. So that in itself leads to some inflationary pressure. The leadership is very keenly aware of it. So in the recent months, they've been clamping down on asset price appreciation, especially in the property sector. So during the 19th Party Congress, President Xi Jinping said, property is for living in. Property is not for speculation. So that comment actually generated a huge amount of applause in the audience.
But Jing, how do you deal and how do you worry? How much do you worry about debt, right? So they tried to do a couple of, regulatory reforms in moving some of the debt into equities. But what is the smoothest way and effective way to deal with it?
Well, I think growth actually has a lot of benefits. So far this year, earnings growth have been very strong. EPS is growing about 18% this year. Economic growth has surpassed expectations. So therefore, we're beginning to see some deleveraging taking place. For example, in the first 9 months of this year, for the first time in many years, corporate leverage ratio has come down ever so slightly, about 1 percentage point. It's still very high, around 150%. Also, in the overall economy, leverage ratio has come down from 267% of GDP to 266. Now, therefore, in the next 5 years, I think under Xi Jinping's second term, we will have to see more efforts being put on SOE reform and banking reform. Deleverage will have to continue because right now the leverage ratio is still too high.